And as you know, the relationship between the US and Portugal is a very old one. Portugal was one of the first countries to recognize the independence of the United States, even if at that time we have our biggest ally that was United Kingdom. Since then, we became the platform for helping business people to do business in Portugal, American business people, entrepreneurs to do business, invest or to trade with Portugal, and the way around. So it's a two-way platform that we are operating today. Just to tell you some figures. United States is nowadays the fifth largest trading partner with Portugal. It was the biggest outside European Union, but after Brexit, it's now the second because UK is the fourth largest partner with Portugal. We export to the United States figures 2019. Because after COVID, the figures don't have the same meaning. But before the pandemic, it was around 6 billion of exports and 4 billion of imports from the United States. So it's growing, this figure. We have 1,000 US companies operating in Portugal that employ around 50,000 employees. More than half of those companies, they are in Portugal for more than 10 years, and 28% of them more than 20 years. So it's a long-term relationship that we have with American investors. In the last 5 years, American investment totalized more or less $1.2 billion, and mostly in ITC, information technology and communications. Just a small note that our startups, and you know that we have 5 unicorns nowadays, Portuguese startups, they depend 90% on foreign capital, of which 60% is American capital. So there are lots of American investors investing in Portuguese ventures with the venture capital. And before the pandemics, we had a record number of American visitors in Portugal, 1.2 million visitors in Portugal. Portugal is really is becoming a very attractive country, not only to invest but also to live in. Portugal is ranked on the 30-something position, depends on the year, on the Global Competitiveness Report. The English proficiency, English language proficiency is growing up, is number 12 in 100 countries that are ranked on this index. The talent, in terms of talent, we are number 15 in European terms. And of course, you know, in terms of security, we are the third safest country in the world, according to the Global Peace Index. And we have good infrastructure, namely in health systems and transportation and telecommunications. So we are quite well on that. And just a figure that shows that situation is the number of golden visas, as it's called, for people that are non-European Union citizens and that invest in Portugal, either in real estate or in financial funds or through financial funds. In the last 10 years, Portugal issued more than 10,000 golden visas that represented an investment in Portugal of more than 6 billion euros. So it was a very successful one. The rules changed a little bit in the beginning of this year, but just to tell you that Portugal is becoming more and more attractive for people that want to live here. I'm not talking about the tax situation because we have specialists that will tell much more about that. So thank you very much for being here. and AmCham is open to support anyone that wants to do business in Portugal. So please feel free to contact us through the usual means. So I will hand it over to Michael Baum, board member of FLAT. Thank you, Michael.
Antonio, thank you so much. I too, I'll just be very brief. I want to thank AmCham and you, Antonio, for hosting this event. And Catherine, this was her idea. She's the one who was getting pummeled with all of these questions from U.S. Citizens who are relocating to Portugal now in large numbers, as Antonio just mentioned. I'll be super brief and just say, personally, this topic interests me a lot. I'm a dual national. I've been living in Portugal off and on for over 30 years and permanently for the last 8. My wife is a dual national, works for an American company as a sort of remote worker, if you will, although in her case, her American company actually hires her formally through a Portuguese-based, European-based company. And so she's treated like a Portuguese employee, even though ultimately her employer is an American company. And so I think a lot of the questions that are going to come up today are certainly relevant. Now, I'm sure I'll learn some things too. Let me just say just 2 quick words about FLAD, because frankly, I think most people in Portugal have heard of FLAD and know what FLAD is, but I think a lot of the American community here that's relatively recent may not be as familiar. So FLAD stands for the Luso-American Development Foundation, and we've been around since 1985. Basically, we are a Portuguese not-for-profit foundation that builds programs between Portugal and the United States in education, in science and technology, in the arts, public policy. We do a number of different things. We help fund the Fulbright program here in Portugal, for example. We have visiting professorships at numerous universities in the US, among many other activities. So if you're interested, you can check us out at flad.pt. We have a very close relationship with the US Embassy in Portugal. I'm on the executive board thanks to their efforts, and I was nominated through that process. And so we basically we're a big supporter of AmCham. We do a lot of things through the embassy, even though we're technically not part of either of the 2 governments. We're closely in the same sort of, we operate in that sphere, I guess you could say. So I'm going to stop there and turn this over to the real experts here today, who are here to answer your questions. There is a chat box, and so as you're listening, feel free to send in questions. We will collect them, and we also have some other questions that have already come in through Catherine. So we'll have a number of questions, I think, to answer after the presentations. We'll have relatively short presentations by our 2 experts, and then it'll be an open question session. Our 2 experts are Rogério Fernandes Ferreira, who is an international tax and business lawyer. He's one of the founding partners at RFF Lawyers. He also happens to be the former Secretary of State for Tax Affairs from the 14th government of Portugal. So I don't think you could get much more expertise on the Portuguese side. And then from the American side, we have David Eric Spencer, who is a lawyer in New York, who is also a tax specialist working in international transactions. And I thank both David and Rogério for being here. I'll turn it over first to Rogério, I believe, and then we'll move on to David. Thanks so much.
Thank you very much, first of all, for this invitation. I'm very glad, and it is also an honor to be here to speak with you about these new programs that puts Portugal as a platform for investments and residence. First of all, I'm very glad to be here with my dear colleague and dear friend, David Spencer. David Spencer is an international tax lawyer in New York and a dear friend. It's really a pleasure to be here with him presenting this webinar. A special thanks for American Chamber of Commerce, and especially to Graça Didier, that I don't see for a long time. And thank you very much for that. So I would like to let you some words around this title of this presentation, Portugal as a platform for investment and residence. First of all, I would like to say that the Portuguese governments from the left wing and from the right wing for more than 10 and 15 years that are approving measures to attract foreign capital and foreigners to Portugal. This is, I would say, a kind of national strategy due to our huge public debt and also due that we need some immigration to Portugal due to demographic problems that we also have. So just to let you know that these programs that I'm going to speak about are very stable, very well known in Portugal, very simple to understand, and I would say easy to request. So I would not like to, sorry, I have to ask just one more. Just a moment. Sorry. Well, the first question is why Portugal is a good choice. I would not like to speak about our wonderful climate, but it is. We have 300 days of sun every year. Not also about our historical heritage, that we are a country with almost 900 years with the same borders. About our low cost of living, about our landscapes, or about our culinary. I think these are some of the errors of Portugal, which are not tax errors, but also just to let you these notes that we have a safe environment, low crime rate. It's very easy to be well in the main avenue, at the main avenue of Lisbon in the middle of the night without having not any kind of problems. Also about high quality education and health system. Our public health system is a good system that applies for Portuguese citizens, but also for foreigners. By the World Bank, Portugal is highly rated for ease of doing business. Also the third best country in the world for the quality of life of expatriates. And on the side of global peace index, we are in Portugal is at the third position. I think these are good things to let people know. I'm used to, as I usually say, being peripheric nowadays, it's an advantage, unfortunately. And due to the COVID times, almost all the investors that arrive in Portugal, they can work from Portugal at the same time zone as London and Dublin, and speaking with the United States and Asia at the same hour. I think these are some of the errors that we can speak about that could be very interesting to let you know. Nevertheless, I was invited to speak a little about the legal and the tax programs that we have. So please. So I would like to, first of all, as you are American people, you are not European, and I'm speaking to Americans, and as you are not European citizens, you will need in Portugal a permit for residency, and you can get it from this program called the Golden Visa. In fact, it's not really a visa, it's a residency permit. It's, I would say that it's the most well-known. It is the most well-known, and it has a purpose. The purpose is to obtain a valid residency permit in Portugal and to revitalize the Portuguese economy. This is the finality of this program. This golden visa has a validity of a period of 2 years, and it is renewable for the subsequent 2 periods of 2 years. The general conditions are simple, easy to understand. There is the necessity to make an investment in Portugal, and I'm going to let you know, there are several options. But one of the conditions to be fulfilled is to keep the investment for a minimum period of 5 years. Of course, to enter in Portugal with a valid Schengen visa, absence of criminal references in the integrated system of the Portuguese Immigration Services, that it's known as CEF, absence of conviction of relevant crime, and what is more important, you just have to stay in Portugal every year during a minimum period of 7 days per year. So, in fact, there are two main and two general conditions to fulfill, which are making the investment and staying in Portugal during a period of 7 days each year of these years of the golden visa. So the advantages that we can see on next slide, please. The advantages that I can point out are these ones. So first of all, this golden visa is not applicable just for the main applicant. There is a possibility that we call the possibility of family reunification. So there are other members of the family that can request at the same time this golden visa. This allows the applicants and the family members to circulate in Portugal, but also in the Schengen space, including Switzerland, I would say more or less like if they were European citizens. So this is a good way for international investors to come to Europe with this golden visa. There is a reduced minimum permanence period, the 7 days that I was speaking about. At the same time, after the 5th year, there is the possibility of requesting permanent residency, but also the Portuguese citizenship, the passport, after the 5th year of the investment with this program. So please, more. So about the eligible investment activities, well, there are some options in different options of investment. The most well-known, it's the real estate investment. I would say that maybe 85% of the investors opt for the real estate investment. So it's a purchase of real estate investment of a house, of an apartment in Portugal with a minimum amount of 500,000. Nowadays, and since the 1st of January of 2022, just for residential properties only in the interior regions, including Azores and Madeira, which means that this investment is not allowed now at the coast areas, including Lisbon, Porto, and Faro in the south. There is also other options of investment, venture capital investment funds, also with these 500,000 minimum in the acquisition of participation units. in investment funds and in venture capital. There is also the capital investments for research and development, also with this minimum 500,000, and cultural capital transfers for cultural investments, and also job creation with a minimum of 10 jobs, or incorporating a company with this minimum of 500,000. Nevertheless, there is also the easiest possibility, or the easiest option is in fact to open a bank account in Portugal and make a bank transfer of today of 1.5 million euros in euros. So there are several different options of investment. The most well-known, it's in fact the first one, the real estate investment, with this minimum amount of 500,000. Nevertheless, there are some different options of visa. Maybe the second best known is the passive income visa, also known as D7 visa. In fact, this passive income visa is a two-step process residency permit that demands residency visa at the first step, but after a residence, it will be a residence permit. It allows the people coming from third countries outside of Europe to obtain a legal residency in Portugal. In fact, the main condition for this passive income visa is this proof to the Portuguese authorities that they have enough income to support their life in Portugal. They will not need the support of the Portuguese government. And here you can also, we also have this family reunification, like with the golden visa. And again, there is the possibility of requesting the Portuguese passport of after the 5th year. Just another visa. So there are some different visas. Just a little word about the startup visa. The startup visa is also a residence visa for non-EU Schengen entrepreneurs who want to establish their business and to reside in Portugal. It also aims to attract investment, talent, and innovation into Portugal, and you have the possibility of family reunification and to request after the Portuguese citizenship. Just a note that, in fact, the golden visa, for the golden visa, you just need to stay in Portugal during 7 days per year. Nevertheless, with the passive income visa, you will need to stay in Portugal more time. I would say that it's more or less 4 months per year. But with this passive income visa, you will not need to make the investment. This is the advantage. Just another word about the Portuguese citizenship to Sephardic Jews. There is a decree law that is in force since 2015 for descendants of Sephardic Jews that may apply for the Portuguese citizenship with all the rights and obligations that result from that. For this purpose, there are some requirements, namely being descendant of Sephardic Jews, that you have to prove this ascendancy, but also to be legally aged or emancipated under the Portuguese law, and also absence of conviction based on a final judgment for a crime which is in Portugal punishable by a custodial sentence of 3 or more years. So these are the main conditions to request this Portuguese citizenship to Sephardic Jews. One slide more, please. So this, the former programs, these last programs that we're speaking about, the visas, in fact, they are residency permits. Now we should speak a little about tax. Okay, we have a specific tax regime called the non-habitual tax residence regime, that I would say that it's a kind of non-dom tax regime that you find in UK. There are some other tax regimes similar like this one, but as you will see, not so large like this one and not so simple, that you may find in Italy or in Greece. First of all, what is a non-habitual tax resident? Well, first of all, a non-habitual tax resident is a resident like me in Portugal. But the problem is that I cannot request, I will not fulfill the conditions to demand to request this specific tax status. And it is this specific tax status that grants me some tax benefits. So why do I not fulfill the conditions? And you may fulfill the conditions to get this specific tax regime that grants these tax benefits. It's because to request it, there are two main conditions to fulfill. The first of them is to change tax residency to Portugal. And the second one is not being tax resident in Portugal for the last 5 years. So I cannot, I will not fulfill these conditions because first of all, I will not change of tax residency because I'm tax resident in Portugal now. And I'm all for more 30 years that I'm a tax resident in Portugal. But for someone who is coming from Canada, from United States, from Italy, from France, from Switzerland, for any other country of the world that becomes tax resident and that was not tax resident in Portugal during the last 5 years, they will fulfill these two main conditions to request this non-habitual tax resident regime known as the NHR. So the tax benefits are different depending of the source of income. If we are speaking about foreign sourced income, or if we are speaking about, which will be the other slide, about the Portuguese sourced income. So maybe we can start by the Portuguese source income, just to let you know that in fact this tax status, you will find the most interesting tax benefits if you become tax resident in Portugal and if you have foreign income to Portugal, because as we will see, almost all the income coming from outside of Portugal will be exempted of personal income tax. It will include, as we will see, almost all the income. So it includes salaries, includes fees, it includes dividends, all kinds of capital income like dividends, like bank interests. It also includes capital gains on immovable property. There is an exception for capital gains on movable property, like on shares or on bonds, okay? But it also includes pensions. All income coming from outside of Portugal will be almost all, except the movable, the capital gains from movable property will be exempted of personal income tax. At the pensions, there is a flat rate of 10%. Before it was a change of our law. Before that, we had what we called a double non-taxation. Because just to give you a brief note about that, almost all the tax treaties signed by Portugal, before, please, just one before, one slide before, please. Yeah, okay. No, one before, please. Okay, it's okay. Just a brief word. Almost all the tax treaties that I'm going to speak just after about have a specific clause saying that it's the country, the state of the residence that will have the exclusivity of taxation on pensions. Almost all. In fact, with the double tax treaty signed with the United States, it's not like that. But almost all the tax treaties signed by Portugal with other countries, they are 79. They have a specific law saying that it's the country of the tax residency that can tax exclusively pensions. So before we had an exemption with this unilateral and national non-habitual tax residence regime, which means that the state of the source could not tax due to the tax treaty signed by Portugal, and the state of the residency, Portugal, was also not taxing because the pensions were exempted of personal income tax due to this non-habitual tax resident regime. So we had a kind of non-double taxation on pensions. The Portuguese government was very pressed, I would say, by the Scandinavian countries and countries, and some years ago they changed it for a flat rate of 10%. So, in fact, for foreign source income, what we have to point out and what is important is that almost all the income coming from outside of Portugal will be exempted of personal income tax, except pensions that are taxed with a flat rate of 10%, okay? And also capital gains on movable property. Most of the time, they are also taxed with a tax rate of 28%. But we have to check that case by case because it can be different on the capital gains on movable property because it depends of the double tax treaties. So one more slide, please. So when we are speaking not about the income coming from outside the country, but income, Portuguese sourced income from an activity in Portugal, I would say not from clients outside of Portugal, but for an activity in Portugal. This specific tax regime, the non-habitual tax resident regime, we have a list of activities that are known as high added value activities that are protected. I would say that it's a large list of activities, so it's not very difficult to be included in this list. But nevertheless, if your activity is included in this list, it includes designers, it includes, well, lots of activity, even managers of companies, you will find a 20% flat rate for personal income tax for the income coming from employment or coming from self-employment. So employment and self-employment income of an activity included in this list will be taxed with a 20% flat rate of personal income rate for a period of 10 years. Just one slide more, please. So what is important here to point out is that this non-habitual tax resident regime is for a period of 10 years. I'm sure that you are thinking about questioning me what is going to happen after the 10th year. So I can let you know that in fact after this 10th year you will be taxed as me, as an habitual, I would say an habitual, a normal tax resident. Of course, if you leave Portugal during 5 years and you fulfill again the two main conditions that I was speaking about, meaning changing tax residence to Portugal, not being tax resident during the last 5 years, you can request it for a second time, for a third time. But you have to leave the country during 5 years to ask it again. Okay? Just a brief note about before, please. Yeah, thank you. Just a brief note before about inheritance taxes and donations. Well, in fact, we don't have a tax, a specific tax for gifts or for inheritance. We have a stamp duty of 10%. It's what a tax on the transfer of assets. But at the same time, there is an exemption, I would say, on the transmissions inside the nuclear family, which means that between spouses, between descendants and between ascendants, you will not pay this stamp duty of 10% because you will find an exemption between direct descendants, ascendants, and spouses. Of course, this will depend of many other things. Where are located the assets, of course, and where are the heirs and the beneficiaries resident. So it depends of other things, but in general, it's important to know that on donations and in this kind of cases, between spouses, descendants, this stamp duty of 10% will not exist because we have this exemption of stamp duty. Please, one more. Just another brief note about sale of arts and objects. That if you compare with other countries, I don't know exactly how it works in the United States, but maybe David will let you know. But I know some other countries like Switzerland or France. If you have a Picasso, you will pay personal income tax if you sell it because you'll have a capital gains on that. Just to let you know that the capital gains, the personal income tax on capital gains here, in fact, in most of the cases, lies only on shares and bonds. So the sale of art objects, if they are qualified as capital gains, it will not be subject to tax, which means that if you have your own Picasso that one day you want to sell it, you will not even have to declare it because there is no taxation on it. Just please one more. Another brief note about investment in real estate. We have two main real estate taxes, which are known as IMI, which is a municipal property tax, and IMI, which is an additional to this municipal property tax. Okay. The second one is a state tax, and the first one is a municipal tax. The IMI will tax with the tax rate of from 0.3% to 0.45% the urban property. Okay. Also the rural properties with 0.8%. And if the property is held by an entity resident in what we call a tax haven, there is a big list, a large list of countries considered as tax havens. United States are not included, hopefully. That you pay we will have a rate of 7.5%. Just a note that these rates will be on the VPT. The VPT is a kind of official value of the property, that it doesn't correspond exactly to the market price and to the market value. I would say that normally this VPT is under more or less in average 25% less. So when we speak about 0.3% to 0.45 or 0.8 or 75, it's not on the market value, on the market price, but on something with an amount which will be between 75 to 85% of the market value. At the same time, there exist some exemptions if you refurbish the property that you are buying. In this case, you can find an exemption during a maximum period of 10 years. And also in other conditions, like you have lower tax rates for energy efficient buildings or for property allocated to production of renewable energy. And there are some exemptions like this one that in fact will allow you not to pay during a period of time this IMI. It exists also this additional, which is, as I told you, a state tax, that for individuals you will have 0.7% also on the VPT, but only on the VPT higher than 600,000 euros, and if you are a couple, just higher than 1,200,000 euros. Okay, which means that higher than 1,200,000 euros, you will have this tax rate of 1%. If you are speaking about companies, the companies, they don't have this exemption on the base. They will have 0.4% of the taxable asset value. One more. These are transfer taxes. You will find this EMT, tax on the transfer of real estate. The tax rates may vary, I would say, between 5 for all the properties, and on the urban properties between 6% and 10%, depending if they are acquired or not by residents in tax havens or not. But you will find yes also some exemptions for refurbishment, rehabilitation, within the 3 years after the date of the acquisition, or in some cases if you buy them for reselling. Okay, you will always have a stamp tax of 0.8% also on the VPT. Okay, this stamp tax on the acquisition. Okay, one more please. Our general rate, corporate tax rate, is from 2014, didn't change a lot, but nowadays we have a 21% normal tax rate for companies on the profits. Okay, as we will see, in some conditions in Madeira, we have a special tax rate of 5% on the profits of companies. I will let you a brief note about that. So please, another one. At the same time, as we find the non-habitual tax residency regime for individuals, we have a similar kind of exemption for companies. So it's called the Participation Exemption tax regime, which means that if someone incorporates a company in Portugal, and this company owns another company outside of Portugal, and if this other company pays dividends to the Portuguese company, or if one day you sell the participation on the foreign company and you have capital gains at the Portuguese company, you will have an exemption of corporate income tax. Of course, it depends on some conditions. These restrictions are anti-abuse specific clauses, but the main conditions to have this tax benefit, this exemption, is these two ones: maintaining all the participation of a minimum of 10% company during a minimum period of 1 year. Please. Well, about the Madeira Free Zone, just to let you know that the Madeira Free Zone is a state aid authorized by the European Commission that allows some tax benefits. It depends of several conditions. There are technical conditions, but it's just for this period of time that has to be authorized by the European Commission. So it's a state aid that was authorized until 2027. Here's another one slide. The general tax benefits coming from that is that you will find here corporate income tax rate of 5% instead of the 21%, which is the normal tax rate. And at the same time, when you expatriate the dividends from the Portuguese company established, incorporated in Madeira, in the free zone, there is no withholding tax in the payment of dividends to foreign shareholders, both individuals or companies. One more, please. Just to another word that you to know that exist. They are not so common, but you have these investment and real estate management companies, CG. You have the same in Spain called Socini. In fact, these are corporate, these are companies with a specific object, which is ownership, management, and economic exploitation of real estate. And in fact, these CG, they have this specific tax regime that, in fact, on rental of real estate, capital gains on property, and capital income such as dividends paid by the entities in which the CG has interest, they are excluded from the calculation of the company's taxable profit, which means that the 21% of tax rate, the normal corporate tax rate of the 5% in Madeira, will not include this kind of income. Okay. At the same time, they have exemption of municipal and state surcharges. Just a note that for the shareholders of these companies, if they are non-resident, they will find a flat rate of 10%. One more, please. Well, we were speaking until now about unilateral tax regimes, but it's really important to know a little about what happens at the country of the source of the income. This is why the network of double tax treaties signed by Portugal is important. And as I told you, Portugal has more or less, I think, and if you can see 79 tax treaties. These tax treaties, they include all the European countries without any exception. It also includes all the Portuguese-speaking countries, including Angola, that was the last one. And it includes almost all the most interesting OECD countries. So, which means that the state of the source of the income will be limited by this network of double tax treaties signed by Portugal. And thank you very much for your patience to hear me. And I will be at your disposal for the doubts and the questions that you may have. Thank you very much.
Rogério, thank you so much. This is very, very helpful. And one quick question for you. There was a question that came in. Will the PowerPoint be available for download by the folks who are assisting to this webinar?
Without any problem. Of course, you can send, of course.
Okay. I assume it'll be on our website, on the AmCham website, is where it will be physically located, correct?
Okay, for me.
Right. I'll look for the answer from Graça. All right. I want to leave time for David to say to give his presentation, and then hopefully we'll have some minutes to take up some of the questions, many questions which have come in. So, David.
Yes, thank you very much, and I'd like to thank AmCham and Rogério for inviting me today. I also have a handout material which is, I believe, available through AmCham. I'm going to basically summarize it in this brief presentation. I understand that the primary focus is for U.S. persons working, living, or doing business or investing in Portugal. And there are three sources of law which we always have to keep in mind. One is U.S. statutory law, Portuguese statutory law, and the Portugal-U.S. Income Tax Treaty. Now, the complicating fact when you're dealing with U.S. persons is that the U.S. government has a worldwide tax system, which means that U.S. residents and U.S. citizens are basically taxed on their worldwide income. This can be income received directly, or it can be income received indirectly through ownership of shares in foreign corporations. So we have to keep in mind always this U.S. worldwide tax system. And what is the relationship between the worldwide tax system of the U.S. and the Portugal-U.S. tax treaty? You have to look in the protocol to the treaty. The main treaty was signed in 1994, and there was a protocol signed at the same time. And the key provision in that protocol is that it says, notwithstanding any provision of the treaty, with one exception or a couple exceptions, the U.S. may tax its citizens and residents as if the treaty had not come into force. So basically, you're looking at, this is called the savings clause. The U.S. saves its right to tax its residents and citizens on a worldwide basis, irrespective of the treaty, with a few exceptions. So this is the underlying theme when you're dealing with U.S. persons, even when a tax treaty like the U.S.-Portugal tax treaty seems to apply. Now, that worldwide tax system also applies to U.S. residents and not only to U.S. citizens. So you may find cases where Portuguese citizens are spending time in the U.S. and they become U.S. residents for tax purposes and also subject to this worldwide tax system. In summary, a foreign person can spend up to 120 days each year in the United States without becoming a U.S. resident. That's the general rule. There are certain exceptions, but that is the general rule. So if the foreign person is in the U.S. less than 120 days each year, he or she will normally not be considered a U.S. resident for tax purposes. Now, the treaty has a complicated or detailed description of residence, and that's in Article 4, and there's a balancing test basically on considering whether the person's ties are closer to Portugal than to the U.S. But there is a rule that if a person is considered a resident in Portugal under Portuguese law and a resident of Portugal under the treaty, that person will not be considered a resident of the U.S. for U.S. income tax purposes. So people who spend time in the U.S., Portuguese residents, Portuguese citizens, have to be aware of the possibility of being considered a U.S. resident. The definition of resident in the Portuguese treaty, Portugal-U.S. treaty, is in Article 4. Now, when U.S. persons do business in Portugal, they have to be aware of two basic rules for U.S. tax purposes. One is whether the entity is considered a corporate entity or whether it's considered a pass-through, or what we call a disregarded entity. And there may be some entities under Portuguese law which are considered a pass-through for U.S. purposes, and therefore the U.S. shareholder will be taxed currently in the U.S., even though it is a form of corporate entity under Portuguese law. So the method in which a U.S. person is doing business in Portugal has to be considered very carefully to see how the U.S. treats it, how the U.S. treats that shareholder for U.S. income tax purposes. Now, as a general rule, U.S. persons are entitled to a foreign tax credit. This is in the treaty, this is under U.S. law, but those rules tend to be somewhat complex. They've been changed recently by the U.S. Treasury, but U.S. persons doing business in Portugal or investing in Portugal have to review carefully the new changes in the U.S. foreign tax credit rules. As I mentioned previously, there are some foreign corporations which, for U.S. purposes, are deemed to distribute their income currently. So let's say a U.S. shareholder has investments in a Portuguese company. In certain circumstances, that income may be deemed distributed and taxable currently to the U.S. shareholder, even though it's not actually distributed. So those deemed distribution rules, in addition to the pass-through rules, have to be looked at carefully by U.S. shareholders in Portuguese companies. Now, the exemption, which seems to be of most interest to U.S. persons working abroad, is what is called the foreign earned income exception, and that's Section 911 of the Internal Revenue Code. And that means if a U.S. person, U.S. citizen, or U.S. resident is a bona fide resident of a foreign country, Portugal, or is spending more than 330 days a year in Portugal, and that U.S. person has earned income, basically salary income, that income up to $108,000 a year is free of tax in the U.S. That is an exception which I believe is of primary interest to U.S. persons working in Portugal. That earned income exception does not apply to pension income. Now, there are other issues under the Portugal Treaty, certain special treatment for what's called dependent personal services, basically employment, or independent personal services, which are independent contractor type services. Now, there's also the expatriation provision, which is of relevance to U.S. persons who may have moved to Portugal and plan to expatriate. U.S. citizens and long-term U.S. residents are subject to certain tax rules on expatriation for their income, which is received after they actually expatriate. Now, those are the main points. There's a special 1988 U.S.-Portugal Social Security Agreement, which covers Social Security. And there's a provision in the treaty, Article 20, which covers pensions and Social Security. And for those who have questions about that, those are the provisions. If you have any questions, my contact information is in the handout material. I'll be glad to answer your questions on a pro bono publico basis. In other words, there's no charge. So if I can be of any help, you can contact me through AmCham or through my contact information in the handout material. Thank you.
David, that was extremely helpful, I think. And, we have, I know that we wanted to try and end this in the next 5 or 6 minutes, I think was what we were originally planning, but this is such great information and tons of questions have come in. We can't possibly answer all of them in the short time we still have available. But as I said in the chat bar, we're going to not only have this recording, but questions that we didn't get to that came in today, we will circulate them to David and Rogerio and try to have those answers available on the document that will be shared on the AmCham site, okay? So maybe I'll start off with, again, in no particular order here. I was just trying to organize all the various questions that came in, but focusing on the ones that have come in from the people attending today. Can you tell us a bit about how investments are taxed in Portugal, US based investments, specifically 401ks, IRAs, and Roth IRAs, and whether, obviously this matters whether you have NHR status in Portugal or whether you're just living here post NHR, if there's any key differences that they should have in mind.
If the investment is made through a KEO or through an IRA, then I believe it qualifies for in the U.S. as the tax-free treatment until the time of distribution. The problem is with pension plans which are not pension plans in Portugal, which are not KEO or Roth or IRAs, they don't benefit from the exemption, as far as I know. I'm not a specialist in pensions, but I believe they do not qualify for the exemption. The exemption until distribution only applies to a U.S. entity which qualifies as a KEO or IRA.
Yeah, and I know there was one question that came in, and David, perhaps, or Rogério, you can confirm this. David, I suspect this is more for you. I have a pension fund as a former university professor in the United States with TIA-CREF, but it's based in the U.S. And as someone who's now based in Portugal and has residency in Portugal, a U.S. person with dual nationality, I cannot contribute. I cannot make contributions to my pension fund any longer. And David, I don't know if you want to just sort of extrapolate from that or explain a bit more about that status.
I frankly don't know. Is that because you're not a resident of the U.S.?
Correct. Yeah. I'm allowed to keep the money there and have it accumulate, and invest. But and obviously, once I reach retirement age, I can bring it to Portugal and I'll be taxed on it. But I can't make contributions from my Portuguese income to my U.S.-based pension fund, at least according to my U.S. accountant.
I'll check that.
Okay. Anyways, I just thought that might be a useful piece of information for some of the questions that have come in. Go ahead.
I find that, I'm not a specialist in pensions, but I find that somewhat difficult because you're a U.S. taxpayer, right?
Yeah, I file in both countries. That's correct.
Okay. Why should the source of that income, for example, if I were earning income in Portugal, although I'm based in New York, I believe that income should qualify as a contribution to a KEO. I mean, the source of the income should not be relevant as long as you're a U.S. taxpayer. But
at least, yeah, I mean, at least what I was told was that because I'm not resident in the United States any longer, I'm not able to make those contributions. Nor could I. But supposedly I couldn't open up an IRA from my permanent address in Portugal either. But we'll follow up. Yeah, we'll follow up with that. Okay. Go ahead. Let
me say that I visited FLAD several years ago when I was in Lisbon. So it's a nice building.
Yeah, I'd love to meet you in person if I have the chance again in the future. All right, so there was another question that came in. How are U.S. citizen residents who own businesses in Portugal taxed in the U.S.? I've read about GILTI, G-I-L-T-I. How does that apply? Any difference if you're a dual national, U.S. Portuguese, residing in Portugal? Thanks.
I don't believe there's a difference, but I can check that. I'll get back to you on that.
Okay. And then one other quick question that was kind of also related to these, pension-related, savings-related issues in the States and how they transfer over to Portugal. My question is, for U.S. citizens who are tax residents of Portugal, what is the tax treatment of U.S. I bonds, Series 1 or Series I savings bonds? These pay tax-deferred interest in the U.S. for up to 30 years. But what happens if you're bringing it over to Portugal?
What is the U.S. treatment?
Says these pay tax-deferred interest in the U.S. for up to 30 years.
Yeah, I don't see, I can check that, but I don't see why what you do with those funds should make a difference. But I'll check.
Okay.
Right.
And then there was another question that came in that asked whether there's any special treatment for someone who's both working in Portugal but also studying in Portugal, and whether this activates some other element of the tax treaty. So the question is, if I'm currently working in Portugal but also studying here, does that impact how I file my taxes in either the US or Portugal or both? This will be my first year doing so.
Well, the income that you're earning is not related to your function as a student. I mean, you're not. It's completely. I mean, you're not getting paid as an intern or something like that. No.
Yeah. So it has no bearing. Yeah.
No bearing. Still
have to file in both places.
The same in Portugal. There is no specific rule for that.
Okay. Let me ask a question that was an earlier question that Catherine had that came in, more specifically related to folks who are thinking about relocating to the Azores. Are there any differences for the Azores as opposed to continental Portugal when it comes to taxes? And this would be more for Rogério, I think.
Yeah.
Sorry. Yes, there are. In fact, as you know, Azores and Madeira, they are autonomous regions in Portugal. So they have some specific tax regimes. So the personal income tax, the tax rates are not exactly the same. In the mainland, we have a tax rate that goes from 14.5% with the surcharges until 53%. And in Azores, I think it goes from 10 something until 48. So you have lower tax rates for the personal income tax, and also in the VAT you have some differences as well. So when you buy products at the supermarket, you will find that the VAT is lower. So there are some differences which are due to be autonomous region and also ultra-peripheric region. So this is the reason that also justifies the specific tax regime of Madeira and the reason why it is authorized by the European Commission as well. Okay.
Rogério, one other question that I think you could help with here is, are there any limitations to the type of businesses that American citizens can open in Portugal while they're here on a D7 visa?
No, after having a D7, no limitation.
Okay, and also kind of, again, related to specific activities here in Portugal, is there any specific tax scheme for digital nomads or remote W-2 workers who are earning U.S. income but living in Portugal?
Well, I would say that there is not a specific tax status for nomads or for remote workers. but you can benefit, they may benefit from the non-habitual tax resident regime, which is very interesting, because if they are working for clients that are outside of Portugal, and if the activity is considered an activity outside of Portugal, they may benefit with some conditions of the non-habitual tax resident regime, which means that they can be taxed either by with zero on the personal income tax, or with the tax rate of 20%. Instead, the normal regime goes between 14.5 until 53. And this will be for a period of 10 years. Okay, that's the period that applies the non-habitual tax resident regime.
All right. Well, I know that, that Graça and Antonio had mentioned that we wanted to try to keep this brief today, because everybody has other things that they need to go to. It's already 4:20 here in Lisbon, and so and we, of course, we didn't get to all of the questions that came in, but I know that our illustrious speakers have been very, very generous and have agreed to try to answer those questions, and we'll put them together into the document that will eventually appear on the AmCham website. Perhaps at this point, I'll turn it back over to Antonio to close the session, but I just want to thank everyone. I want to thank Catherine for the great idea, basically. I want to thank AmCham for hosting this, and of course, Rogério and David, thank you so much for sharing your expertise, and to all of our participants. I hope it was helpful.
A pleasure. Thank you.
Thank you very much, Michael. I will just say a few words before the closing to say that it was a pleasure and an honor to host you today. I hope that the information was useful. As Michael said, it will be available on the AmCham social media, and also the contacts for any question that you may want to clarify with our speakers. And this meeting has been recorded, and it will also be available to anyone that wants to review it. I would like also just to announce that AmCham is continuously working on events like this with our members, with our potential members that we would like to attract more and more to our association. And the next meeting we will have, it will be in Lisbon, it will be in Porto, I'm sorry, on April the 7th with Elisa Ferreira. Elisa Ferreira is the Portuguese High Commissioner at the European Commission in Brussels. So she's the representative of Portugal on the European Commission, and she will for sure have a very interesting debate with the audience, namely talking about these resilience and restructuring funds that are available in Europe, but now with the war in Ukraine, everything has to be reviewed, and probably the underlyings of the plans are completely different. So hope to see you there. Those that can do it personally will be very welcome. Those that cannot do, will try to work on remote broadcast. Thank you very much, and hope to see you in the future.